Hi, I'm Chris Miglino with Sequire Spotlight. I'm here with Russell Starr with Defi Technologies. Hey, Russell, how you doing?
Good to meet you.
Thanks for joining us here today. DeFi Technologies trades on the OTC, right? Under DEFTF.
Yep.
So Russell, you have bared through the crypto winter.
Yep.
You had to deal with, what came with that. But now you are in the hottest space right now. You got crypto at an all-time high.
Yep.
You got, the ETFs came out on Bitcoin. You have maybe an Ethereum ETF coming out.
Yep.
You got Solana that is just skyrocketing. Rocketing. You have meme coins that are just taking off.
Yeah.
Tell us why investors are invested in your company, what you guys are doing in the space that's different.
Sure.
And I noticed you have 3 different segments that you're doing.
Yeah.
You're doing the asset management, venture, and the infrastructure.
Yeah.
So talk to us about each of those.
Sure. So lots of questions there.
Yeah.
First question, why invest? Purely from a simple fundamental valuation perspective. I was jokingly saying this, but I actually think it's true. We're the only profitable crypto company, I think, in the world right now. I believe Galaxy's just breaking into profitability.
Well, this quarter they were profitable.
Yeah.
So the readjustment of the way Bitcoin gets accounted for.
Yeah.
So next quarter they'll be back to losing 19 million a quarter.
Okay. Well, but I always believe in just stating the facts. Like Novogratz is brilliant.
Yeah.
What he's done is incredible.
Yeah, for sure.
But legitimately, we are a crypto ETF company. We launch crypto ETFs, and what we've done differently than, say, BlackRock, Fido, or Vanguard. We have 17 that we've listed. They're all in Europe, and the reason why we're in Europe is we have regulatory approval to stake all of our assets. So it's really quite a beautiful model.
Explain that.
Yeah, so we accumulate clients' assets. So you mentioned Solana. We have $350 million in our Solana ETF. We are generating 10% yield by staking all of our Solana in that one product. So we're making $35 million just on our Solana product.
While it's skyrocketing.
While it's skyrocketing, we have XRP, Avalanche. You just go to our website, defi.tech, or our Valor website. You can see all our products. But
how does this work? So you take, your XRP.
Yep.
You put it into a
ETF.
kind of an ETF.
Yep.
But it can't trade in the United States.
Nope.
It trades in Europe, though.
Yep.
So you can get regulatory approval to trade these things in Europe, just not in the U.S.
Correct.
Okay. So the ETF in Europe, can Americans buy?
Absolutely.
They can.
Yeah.
So I could buy the ETF in Europe.
Yes.
So instead of going and buying XRP and holding the crypto, I could go buy the stock.
Yeah, we solve for regulatory issues. So all of our clients are KYC, as they would be for any equity purchase.
Right.
Every single one of our products is cleared by prospectus, as any ETF would be. And so you're using XRP. Basically, instead of opening a wallet, having to get onto possibly an unregulated exchange, holding it, you can't lose your wallet key. We allow investors to buy crypto products in a TradFi fashion. So legitimately, all of these products have now become effectively equities, all 17 of ours. And so, Solana, for example, when we launched our Solana, I think we had 10 million in it. Our Solana is now 350 million.
With the same base amount. Where did it start? You started out with $10 million invested in it.
Yeah.
And it's grown to 350 million?
Yeah.
Wow.
Yeah, now a lot of that's organic growth in Solana, but we actually, even in the crypto winter, we've never had a month where we've lost clients in any of our products, which to me is paradoxical for the US, because it's clear investors want these, like absolutely clear. The Bitcoin ETF is the single most successful ETF in the history of ETFs, and yet the US is, because of political reasons, let's call it what it is, standing in the way of launching all of these other ETFs. Literally, the U.S. could become the center of crypto innovation. Instead, they're pushing this whole ecosystem everywhere else. So
it's going to Dubai. It's going to UAE. I mean, they're taking over.
Literally, just this week we announced that we're passporting all our prospectuses to the Middle East. We're passporting them all to the London Exchange because they just allowed ETPs, crypto ETPs, to trade. Literally everywhere in the world is embracing this except for the US and Canada. And it's so frustrating. Like, we are treated worse by our regulators than cannabis companies. It's crazy.
It is crazy.
Yeah.
So tell me about the business model behind owning the ETFs.
Sure.
Okay, so you own a Solana ETF.
Yeah.
You stake it.
Yep.
Does the ETF keep the money from the stake?
DeFi does. The parent company.
The parent company.
So investors, 99% of investors, other than the most sophisticated ones, don't really take advantage of the staking yield that any of these protocols offer, right? Polkadot's 13%. Bitcoin you can lend for 2-3%.
Right.
Ethereum 3 to 5.
This is actually a really good point that everybody needs to understand about this business, is that you can buy these crypto assets and make more like a dividend return on that.
Yes.
That's more favorable than what any public company is paying.
Yeah.
And you just have to deal with the volatility of the underlying asset,
But the beauty of DeFi, like the parent company, and you mentioned in the US it's DEFTF. We trade in Canada on a senior exchange, the CDOE actually, DEFI. But to your point, by owning DeFi, you get all that yield. So you get exposure to all of these assets that are growing. And, just go to our website, you can see, like, we started, I think in September, we had 150 million in AUM. We have 650 million in AUM now.
Wow.
And we generate a yield of about 7.5% on that money that all flows into DeFi. So to your point, if you don't want to have a complicated life, try to figure out how to do all of this, you just buy DeFi by itself rather than the Solana ETF or the XRP ETF. You just buy DeFi. We're almost like a diversified ETF itself, listed as a traditional stock symbol in Canada and the US.
But you're taking advantage of all the staking and all of the lending and the hedging and everything that you're doing there. And you're making the fees off the ETFs. What are the fees off the ETFs? How does that work?
So we charge 0 on our Bitcoin and 0 on our Ethereum. And the reason we can do that is we can stake and lend. BlackRock would never do that because their only revenue stream is their management fee. Every other product, we only charge 1.9%. So we'd be, I believe Fidelity is 1.75. I haven't really looked at the competitive landscape, but basically we're one of the lowest priced ETF providers in the world. So we have management fees of 1.9% on that AUM. We have the average staking yield of about 7.5%. And keep in mind that that's probably going to go higher. We're launching another 15 ETFs this year, another 30 next year. And those are all going to be in the altcoin DeFi protocol space. And those typically yield more than Bitcoin and Ethereum. So you're probably going to see AUM going up, which is great for DeFi, because on every dollar of AUM, we generate 7.5% yield.
Good for you.
Yeah.
That's fantastic.
Yeah.
And then, so that's the asset management business.
Yeah.
And I mean, the day that the U.S. regulators let you come into this market, it's done.
Yeah.
Yeah. Let's see that.
Well, like as I was mentioning, we just press release that we opened a trading desk in the Middle East. We're passporting all our prospectuses there as well. That's arguably the most important crypto market, maybe Asia as well.
For sure.
Because the money in the Middle East is substantial. And if you think about it intuitively, you've got the U.S. government printing dollars like it's going out of style. Actually, it was so funny. Cash Carey, who's supposedly the brilliant Fed guy, literally commented the other day. He goes, why would you buy Bitcoin? It could go to 0 when we can print money limitlessly. And I'm like, I'm a background in economics. If you print money limitlessly, the U.S. dollar is going to go to 0, right? Like, the end game is the same. And I think people have realized the gig's up. Now,
it is over.
Yeah.
When people realize that, you can get your own wallet and I can send, I can send $10
Yeah.
And, to free.
Yeah.
To nobody. It could be there in a minute with nobody in the middle.
Yeah.
Nobody in the middle of this thing. It's just, it's over. And then what really is going to be the game changer is when people start to realize that you don't need a NASDAQ in the middle of a trade.
Yeah.
And all of this stuff can happen on decentralized exchanges all over the world that nobody can shut down. No regulator can shut down these exchanges. The only thing they can do is come after the people that trade on them, which that in of itself is very difficult to identify.
Yeah.
The market for money is decentralizing. It is changing.
Yeah.
You're in a really good space. So let's talk about the other two categories.
Yeah. So importantly, before we get there, one thing we did that I think was brilliant, we have a really good relationship with Palm. Palm's one of our advisors, and he's a household name here in the U.S. We bought his research company. So that conference that he had 2 weeks ago, that was actually our conference. So we've got Palm and Will Clemente, who are brilliant in the background doing research on a lot of these new up-and-coming protocols that we'll clearly be launching ETPs on. Then we have what we call our venture arm, and our venture arm is mostly an investment in a private crypto Swiss bank called Amina Bank. And then we have about 17 small investments to start: Oxygen, Wilder World, Luxor.
What's a typical check size that you're
only 100,000? But why it's meaningful is typically no one can see these, but we get to see them because of Pomp and our two founders. One of our founders created Hive Blockchain. The other founder created XBT Provider, which is now CoinShares. So these are legendary guys. We get to see these investment opportunities that no one else will. We probably could put more in, and with the look, I should say this, guys. We're making about $40 million in profits this year. Just so everyone knows, we're very profitable, and we're only trading at 4 times profits. Most companies trade at, in this space, would trade at like 30 times profits.
Right.
So we're very, very cheap. But that small investment profile of 17 investments at 100 grand, that's 1.7 million. It's worth about $17 million now. So it's almost a 10-bagger on all of them, if you think about it.
No, good for you.
And it's just
another. You get paid on that business. It's a carry on the upside.
It's a carry on the upside, and then we just one of the things that many retail investors don't focus on is when you're in a company that isn't profitable. So, for example, the miners, they're always diluting because they need more money. We don't have to. So you're never going to see us do a financing in your face because we're already profitable and we don't need to raise the money. But the way we turn those investments into money is we basically just sell them. So we could take that 17 million, and if there was something we absolutely adored, and there were 3 of them and they were raising 5 million each, we could effectively do 100% of those rounds and be long something that has 10-bagger potential.
Right. That's great.
Yeah.
Okay, so now tell us about the
infrastructure.
Infrastructure piece. But then I also have a question about how you avoid being a investment act company with all these assets.
Because the majority of our business is ETFs.
Got it.
Yeah.
Okay, and that AUM counts as assets?
Yes.
But it doesn't.
It's not ours.
It's not yours. So it doesn't. Okay, got it.
But if you think about it intuitively, 17 million is what we have in our private investments. And to your point, how do we stay away from being an investment act, which would complicate things a lot? We're making, if our AUM didn't change $1 right now and Bitcoin just stayed flat and everything stayed flat, we'd make 50 million in revenue and basically 40 million in profit this year. If any of that goes up, then we're making 50, 60, 70, 80, 100 million in profit as our AUM grows. That dwarfs that 17 million. So it's not a...
But if one of those investments turns into a Solana and skyrockets...
We'd probably sell it before then. So,
well, there you go.
Yeah.
All right, so now let's talk about the last piece.
Infrastructure. Yeah, so as we as people buy our ETF products, we accumulate more and more of the underlying. And when you get to a certain quantum in that underlying, you can go to the foundation. So call it Solana, Polkadot, Cardano, XRP, whatever. And you can ask, well, you don't have to even ask. They'll allow you to manage a node. And that's part of the decentralized fashion. So what a node allows you to do is vote on transactions on the chain. But why it's incredible for us is it's another way of generating more yield. And each one of these nodes that you manage can make you $1 to $2 million a year just in terms of yield.
Wow.
And if it happens to be a Solana or something like that, and you actually catch, like, let's say, like, I think we have the only Uniswap and maybe the only XRP in the world, although 21 shares late. I'd have to double check that. But let's just say we do. XRP, let's say XRP becomes the next Solana, and we were staking and generating those tokens as part of the yield, and then that becomes a 100-bagger, then your revenue model just gets crazy. So,
good for you. It's got to feel good to be in this spot where you're not out in the field by yourself anymore. People are actually recognizing what you're doing. Because I know it feels bad when you're there. It had to be a tough run during the winter. I mean, it had to be brutal.
It was brutal because obviously we need a certain amount of AUM to break even, which is basically you add $10 million, and if you're not making $10 million, you're losing. And that's what happened. We had to do a very, very small financing. We raised, and this is hilarious. We had to raise $3 million, which we could probably do with our eyes closed now. Like everybody's begging us to let them in. And I'm like, no, you got to buy in the market. In September, when we raised that money, every single broker dealer I went to was like, nah, I can't help you.
Yeah.
No. And again, these are great people, but if any of them had the foresight to see what was coming, and I'd like to think we did, we did the financings ourselves. So management and insiders did them.
Good for you.
Yeah.
Well, you guys are getting the benefit of that now.
Looking better now.
Yeah. All right. So three sections of the business. Let's talk about some of the revenue, because you talked about what's the revenue look like, and did you file the 24, full 24 yet?
So what we did was we did our last year and Q4. Our Q4, we basically broke even for the year in December.
Okay.
And if you remember, December is when Bitcoin and the rest of the market started taking off.
Right.
Our Q1, and this isn't me with any insider information or anything, it's so easy to predict our revenues. We've given you the guidance. So we gave forward-looking revenue. We said, look, if our AUM stays at 650 million, and I clearly think it's going to go higher, and if all of these really smart people are right about the halving and what Bitcoin's going to do, these numbers are going to go much higher. But let's just assume nothing changes. We don't list any more products. Everything stays at 650 million in AUM. We do 46.8 million in revenue. We do 34.8 million in profit, and our market cap, I think, in the US is 180 or 160. I'd have to look. I don't pay tons of attention to it. But if you look at it from that perspective, you now, and this has been my pitch throughout this entire day, if you go look at the miners or Galaxy or just any of these companies, how many of them are profitable?
Right.
Not many.
No.
They're trading at multiples of revenue, and we have very meaningful revenue as well, but we are profitable. Like for the first time ever, an analyst can literally value our company off of profits. So 34.8 million in profits, 20 times, 30 times. Let's say it's 35 at 20. That's a $700 million market cap. We're at a $200 million market cap. You're looking at a 3.5 bagger.
Wow, that is way undervalued. I think.
Yep.
Way undervalued.
Yeah.
You know what it is, and I think that people are just scared from the last downturn.
I wouldn't disagree.
I think they're a little shy. But once people get used to the volatility in crypto, then you just go on with it. And once they learn they can stake this stuff,
I mean,
everybody I talk to and I say, you can buy this and stake it. They go, what do you mean?
What are you talking about?
And everybody says, well, it's not worth anything. And you go, well, what do you mean it's not worth anything? It's running the whole network. And they explain to them, how does staking a token work? What does it mean to stake the token? And get into this whole conversation around this subject. And then they go, oh, that's, there's value. I mean, now, there's no value in somebody would say there's no value in some of these meme coins, but some of these meme coins now are creating their own blockchains. They're creating their own blockchain, their own system.
So my background is, lots of education, started my PhD in econometrics, but I was an institutional salesperson, institutional trader, corporate finance guy, started a broker-dealer. It's a big one called Echelon. People seem to think that here's the best way of putting it, and honestly, this would have been my most famous and friendly client. He always said to me, what's the value of gold? Tell me, what's its intrinsic value? And I'd scratch my head, and he'd be like, Russ, it's a really simple answer. It's what someone's willing to pay for it. So if someone goes out there and says, well, Kashkari, Bitcoin's worth 0. No, it's not. It's worth what people will pay for it. And if they're willing to pay $70,000 for it, that's what it's worth.
Right.
You can't create your own theoretical view when the world is proving you wrong.
Mm-hmm.
So what is Bitcoin worth and what will it be worth? Again, everything's different now. The Bitcoin ETF has put a floor in it, but it also allows for shorting of the future, shorting of the ETF. I think what you're going to see is less volatility. It's probably going to trend higher. We think it's going to 100. We run our model off 100,000 Bitcoin. We make 90 million in profit.
Good for you.
Yeah.
That's great.
Yeah.
I think you are in the right spot at the right time, and you're going to benefit from that right now.
Well, on that point, management owns 33% of the company, so we agree.
Yeah, happy campers right now.
Yeah.
Russell Starr with DeFi Technologies. Average into this stock over time if you guys want all kinds of crypto exposure.
Yeah.
And it's a good one. Thank you for being with us here today. I appreciate it. Thanks a lot.
Cheers.